Let's go to our exempt topic here. We have a lot of exempt entities on the line here. There have been some critical provisions and changes here. Talk a little bit about what those are.
Sure. So probably top of the list is changes to the excise tax on excess compensation. So under the old rule, there was a 21% federal excise tax on compensation in excess of $1 million paid to employees, and it was really targeting the top 5 kind of highly compensated employees, right? It was a 21% excise tax. You looked at the top 5 employees; those are considered your covered employees, and you kind of work from there. Under the new rule, the covered employee definition is expanded to include all employees making over $1 million. So you're no longer looking at just that, top 5 employees scope, limited scope. This rule is for tax years beginning after 12/31/2025. So there is some time to do some planning around this issue. Along the same lines, another issue that we're dealing with or working with clients on is this endowment excise tax. This is, under the old rule, was a 1.4% federal excise tax on net investment income earned on college and university endowments. The new law expands the brackets, and really the new tax rates apply depending on the student adjusted endowment size. But the 3 brackets kind of extend three different tax rates: 1%, 1.4%, 4%, and 8%. Really depends on the endowment size. Good news here is the law does raise the exemption to 3,000 tuition paying students. So if you're under that 3,000 threshold, you're exempt. Like the other compensation tax, this new rule on endowments applies for tax years beginning after 12/31/2025.
Well, I think that's really important. And I think, like you said, there's time to prepare for that change. So that's really what we've got to watch out for here.
Yeah, and the key thing here, just to kind of round out this segment, Leslie, is this is a tax on the employer, the exempt entity employer, not on the employee. They do have time to evaluate this, but now's a good time to really schedule out next year's compensation levels, including severance, and really kind of get a handle on what the excise tax exposure might be.